Okay, hello everyone, and welcome to this weekly trading roadmap for the week starting the 23rd of November 2015. Had a bit of technical issues over the weekend, so couldn't actually record that earlier. So we're going to be going through this kind of midday on Monday, and obviously we do have kind of a half week this week, so I'm really only going to cover the main event and risk for Monday, Tuesday, and Wednesday, as Thursday and Friday we basically have the US bank holidays for Thanksgiving. So just taking a look on the event and risk front and what we're actually paying attention to this week. Obviously today we had the German manufacturing and services PMIs that came out, the European as well. Also, the U.S. manufacturing PMIs and the existing home sales. Probably existing home sales are more market moving than any of the other figures at the minute. Overall, I've put myself about a low relevance for today, lower than the other days. And with regards for my risk allocation and money management, as I'm really only trading the first 3 days of this week, I won't be trading the latter 2 days purely because there won't be much volatility, won't be much volume. I don't tend to perform very well on those kind of days. So what I'm going to be doing is giving myself 25% of my risk allocation for the week on Monday. For Tuesday, we've got the German IFO. Not as market moving as before. Again, typically very much a leaked figure, so you tend to see the move that you get maybe half an hour before coming into the figure is usually what the figure is going to be if it's a big miss or a beat. Nowadays it's not as market moving as it used to be, but in any case, do bear in mind this figure is notoriously leaked in the industry. We've got also the US core PC, we've got the GDP, which is probably the most important figure of the day, consumer confidence, and the ECB speakers for the rest of Tuesday. That I've given myself about medium relevance on that day and a 35% risk allocation for the day. Moving on to Wednesday, as we have the bank holiday on Thursday, we've moved the jobless claims to Wednesday. So US jobless claims come in on Wednesday, as do personal income, the PCE core. Quite an important figure for the Fed, so do pay attention to that figure. Obviously, if that figure is in line or higher than expected, we should still expect a rate hike in December. If we get something lower than expected, maybe they might take their foot off the pedal a little bit, because really the only thing that's been lagging is inflation. So do bear in mind the core PC is a very important figure for the Fed. We also have the durable goods orders. Again, reasonably important figure also for the Fed to see how the orders for durable goods are in the economy. And then we've also got the University of Michigan consumer confidence and the new home sales. Obviously, Uni Michigan is usually done. Actually, no, this is usually done on that kind of day anyway, so no mention that. It's actually the Chicago PMI that's done on the last day of the trading month. So we've got high relevance for this day overall, as we've got a lot more figures and in general important figures for the market. Give myself 40% of my risk allocation for the week. Does not go to say I'm going to give myself a very high risk allocation overall on the week. So, if I'm usually risking 3 to 5k, for example, arbitrary number, on my usual weeks I might risk maybe 1 to 2k and then give myself a risk allocation accordingly. So this is not obviously comparable to 40% on this day is not comparable to a 40% on any other day of a normal week, because I've got less trading days this week. So that's pretty much what I'm looking at in terms of event-driven risks for the week. If we take a look at the market structure, I'm not going to go through this, obviously. US bank holiday on Thursday, not giving myself any risk allocation. And Friday, pretty much most US exchanges are going to be closed. Eurex will be open. I think a couple other exchanges might be open early, close. But we have the UK GDP. If you are looking to trade that, that's coming out on Friday as well, so just keep that in mind. So in terms of market structure, let's move over to start off with the Euro Stoxx 50 first, to go through the two main markets, Euro Stoxx 50 futures and the Bund futures, as I usually go through. And with regards to context, just go through a couple of small hypotheses here. So in terms of what we did last week, to give you guys a little bit of context, Obviously opened a lot lower due to the Paris attacks. We came into a very, very key area of support. Well, previous resistance turn support, that 3284 mark. We've talked about it quite in depth in the roadmaps and the weekly wrap-ups. This key zone was pointed out many times, and we came in and found very, very decent support, as you can see in that zone in there again. Bounced off, rallied extremely quickly, found our value a lot higher into previous value zones that we've been in before. And as we stand, the current market structure with the metrics, with 3471s our value area high of last week, so weekly value area high of last week. Our weekly value area low comes in at 3418, as you can see in there. That is our value area for the week last week. So bar anything major, if the market doesn't want to move or revalue, it could just range in this area. That is a hypothesis, so hypo 1 could be that we just use this range to trade within for this week. If there's nothing really big out of the market and nothing market moving as such, potentially the market might actually look to just range and find a bit of balance. That's one of the hypotheses. Another hypothesis, obviously, I'm looking at the fact that this market actually does have a pretty big volume and value void in here. So in this scenario that the market actually can find an offer so below these 3418s and actually uses this area as resistance, I'll probably be looking for this market to try and fill in down to these areas. The next real area of high volume comes in around these 3360 areas. So I'm looking potentially for this market to fill in down to here and then maybe range and fill in this value that we've left from the previous week. And not to say that we haven't traded in that area before, so it's not something, we have filled in value here before, as you can see. However, if we do break below here, I'm looking for that to potentially fill in what we've left behind the previous week. So that's obviously our H1 and H2. Hypothesis obviously number 3 is if we let's say find support here, can't break below, let's say get back above, make our way to the other side. Really, we're looking, or if we just rally from here, essentially, the real hypothesis is if we can hold above this area in here. Previous kind of lows, we've got to close up in here as well. So really, you're looking if the market can hold and create a base in here before attacking this important 3487 level. Now, if we take a look at that level, going back to the weekly structures from August, really, if we can breach this area, that's really where it starts becoming key. Because if we start breaching this area, this area 3498 up to about these 3505 area, you can look back to these areas on the weeklies. You can see there's lots of pivoting in this area. So in this week in here, we found resistance around this area, we found support around this area, resistance around this area, again support around this area. So this is a really big pivot zone. I mean, it's a big zone, nonetheless it's a very big zone. But keeping that in context, if we move back and see, what are we looking for potential rally above this pivot area? Because now we've been kind of ranging below it for a little while. We're probably building quite a bit of steam now and energy, enough energy for us to break it. But what are we looking for if it's actually going to work, if it's actually going to move higher? Well, in terms of the hypothesis I'm looking for is I want the market to breach these 3487s, and I'd also like the market to start holding above. You see this little volume ledge in here. I want the market to use it at a base. If we break above, I want it to use this area as a base. These 3498s, you can see low volume just starts in there. With an open of the week, we've got a close of the week in there, so I'm looking to the market hold above here. If we can hold above here, we're likely to just try and rotate our way. We've got a lot of untraded area in here. Again, something I'm looking for potentially for the market to trade up to these areas. And some key little areas in there as well to trade off of. Maybe these 3575s. You've got a little bit of a single print and a bit of a weekly low there. But really, I'm looking potentially for a short-term scalp. Really, if we get back up to these 3586s, which is actually a gap We've got a gap there in the market. If you're taking that trade, if you're looking for the market to take that trade, if let's say we get up to this area, I wouldn't keep my stop below 35.94s. You've got this little high volume node and weekly value area high here. If anything, if you're going to take the short, if you're looking to sell the market here, you want to have your stop loss above this area here. It's got to be above here. So if you're looking to sell that for a move back inside, you can't have your stop inside there, buddy, because really you're not wrong if it trades in this area either. So I know you guys like to keep some really small stops if you're trading intraday scalps, but I wouldn't say anything less than 10 ticks on this kind of trade. So just keep that in mind if you are looking to trade that sort of scenario. So like I said, with regards to actually trading up into this region, I'm looking for the market to hold above this area and create value before moving higher. First and foremost, breach of this VPOC at 34.87s. So that's overall the analysis that I'm looking at in the Euro Stoxx 50. If we take a look over at the the Bund futures. So in terms of metrics, in terms of the areas that we're looking at, let me just take out a few levels from here, the downside, because I'm not quite using these as much. Just bear with me so I can just draw this in for you guys. Here you go. So that is, from a weekly perspective, shame I couldn't get this out earlier, because really what we were looking at in terms of a daily structure was the one time framing. So actually, if we take a look at the daily structure, you'll see really the area we were looking at is these 157.78s, then also again these low at 157.65s, and now we've taken basically every low on the way down. So the concept of one time framing, obviously we've been rallying. Since we've been rallying in here, we've just been posting so a higher low in there, a higher low over there, and as you move just higher and higher, all these daily lows are higher than each other, and that's really what you call it's really what you call a one time framing structure. So what we're looking for coming into this week, you've got all these lows higher than each other. The minute the market takes out a daily low is when we're going to start seeing two-way flow come into the market, because this has basically been one-way flow. We've seen one-way flow. The minute we get a daily low taken out, that's where we're starting to see daily, two-way flow come into the market, and that's essentially what we've seen today. The market's come in, taken out a daily low, and you can see the reaction the market's had, trying to find value lower, taking another previous daily low, another previous daily low, and really, it shouldn't really have a problem taking out this low either, in my opinion. So this is really the structure that we're looking at on the daily. Now, if we just get back to our weekly profile to put that into a bit of context. Now, from a metric perspective, we've held below the VPOC of last week. Our VPOC at 158.03. 158.10 was our value area high of last week. So we've kind of just come off that. This is what you would call initiative selling. So it's initiative selling if someone comes into the market and pushes value lower within the previous value area. So someone's taking initiative as opposed to something where someone, in a scenario where the market had come up to an area and then we saw responsive selling. So responsive selling is it comes out of value. People think this is out of value, so they sell it back into value. But this is inside last week's value. So we're getting initiative selling. This is an indication that there's actually someone in the market trying to do business in an area where we perceived value last week. So in terms of scenarios now, obviously we've come off. We've got our weekly value area low at 157.32. We're currently trading below that, creating a VPOC at that level as well. The pivot for me, the area for me that we want to keep an eye on, if the bulls want to hold if they want to hold this market together and keep that bullish sentiment in the market, I feel as if this pivot between these 156.99s, which is last week's or 2 weeks ago value area high. We've got this whole splatter of areas even in here. I think this is the 97, 98 area. Again, 04s in here. So this whole region in here is very critical for the bulls. If the bulls want to hold on to their sentiment, they've got to hold the market above this area. So for me, I think there is still risk reward in trying to trade this area. First touch, you've got a very, very low volume node at that level at 157.04. So for me, that pivot, I'm putting it in at 04s, even though I know that value area to the downside is at 99. So ultimately, I'm looking if the market can hold above 99s. But I'm really liking this low volume node here at 04s. You know, first touch, I reckon there's a pretty decent buy opportunity. And what you're looking for essentially on this trade is you don't want to see it trade 03s. In fact, you barely want to see it trade any volume at 04s. So essentially, you want it. The best case scenario is it down ticks 04s, trades through, goes offered 05s, trades 04s, maybe a few hundred contracts, if that, and then auction straight off of it. So you're looking at a reaction like that. You want that market to auction off. If it doesn't work, you're looking for it, you know, if it doesn't work, you know straight away. If 04s melts and it just trades 3s, 2s straight away, you know, you're probably looking at that kind of scenario not playing out as well. So you probably want to see a little, at least a small reaction off this level. Obviously, we can come through, and then if we hold 99s, get back above, that's also a scenario for me. But I'm looking, at least in the very short term, for maybe a small reaction back up. If we can hold below this area at 32s, then maybe we'll breach lower. But I think there's still a little bit of a scalping opportunity in that to the downside. Obviously, in the scenario where the market doesn't respect that area as support, well then we're opening up a scenario where the market could actually have a pretty big downturn. So if we start breaching this area, which we are getting close to now, and I probably should get back to my desk soon, and we start using this area as resistance, especially these 99s, you know, then we're potentially looking at a move that could test these 156.33s, this weekly VPOC in here. So that's a pretty interesting hypothesis, pretty interesting scenario to keep in mind. Obviously, if we hold above this area and bounce, you know, you're looking for the market to potentially at least get back above these 32s to maybe repair some of this, you know, quite a few of these single prints in here that we have already left on the week so far. But like I said, really the majority of your trading volume of volatility, you're probably looking between Monday and Wednesday, unless we have something big come out on Thursday and Friday, maybe potentially a terror attack. It's not something we want, but if it does happen, the markets will be very thin and could move really quite quickly. So do bear that in mind. Obviously, in upside scenarios, if we do reverse off that level, get back, take out the open, and start creating value in this area, we'd look for a breach of these 03s. And if we can hold above this area, especially these 10s, you know, you're looking for a move that would test these 158, 60s, 62s, which was that previous weekly high that we posted in that area there. So that's currently the structure in the market. It's currently what we're looking at in the Bunds. Hopefully we get some opportunity before the end of the half week. And with regards to trading, just try and keep it tight. You know, it's not a time of the year to be a hero unless you really do get volume and volatility in the market, but try and keep your chips close to you. Try and trade, you know, prudently. And if you've had a good year so far, if you've made money the last few months, you know, keep it with you. Don't let other market participants take that away from you. Guard it close to you, and only put on the best trades that you believe in, that you have an edge in. So thank you very much for listening in, guys. I'll be doing a price ladder stream tomorrow as well. I won't be doing a market wrap at the end of the week. Like I said, I'm not coming into the office Thursday and Friday. So hopefully you guys have a great week and a profitable one. This is Miltos signing off for Futex Live. Bye-bye.